The dollar was once considered the most stable and reliable currency in the world. For decades, it dominated global trade and was the main store of value for governments, businesses and investors. But is this reign coming to an end? In recent years, signs of instability have begun to emerge: rising inflation, rising U.S. debt and a global movement towards de-dollarization. Countries are looking for alternatives, while new financial technologies such as cryptocurrencies and central bank digital currencies threaten the traditional system. Artificial intelligence has analyzed historical data, economic trends and the key factors influencing the value of the dollar. And the predictions are surprising. Is the dollar collapsing soon? Are we on the verge of a major change in the global financial system? And if it does happen, how can you protect yourself? Let's explore these questions and reveal what AI has discovered about the future of the world's most powerful currency. 1. The dollar and its global dominance. The US dollar not only dominates financial markets, it has also become the most powerful currency in modern history. But how did it achieve this position? To understand the challenges facing the dollar today, we first need to look at its rise and its importance in the global financial system. The rise of the dollar. How it became the world's strongest currency before the dollar assumed its central role. Other currencies dominated the world economy. The real, the Dutch guilder and, more recently, the British pound sterling were once the main currencies of global trade. But everything changed after World War II. In 1944, the Bretton Woods Agreement established a new international financial system, placing the dollar at the center of the global economy. This agreement determined that all major currencies would be pegged to the dollar, and the dollar, in turn, would be backed by gold. This meant that any country could exchange its dollars for gold at a fixed price of 35 United States dollars per ounce. As a result, the dollar came to be seen as the most reliable currency in the world. It became the main reference for international trade, being used to price goods such as oil, metals and agricultural products. As a result, any country that wanted to trade on the global market needed to maintain reserves in dollars. The end of the gold standard and the consolidation of the petrodollar. But in 1971, everything changed. The then President of the United States, Richard Nixon, announced the end of the gold dollar peg. This meant that the U.S. would no longer need to maintain gold reserves to guarantee the value of its currency, allowing the Federal Reserve to print dollars freely. At first, this generated distrust in the market, but soon a new system emerged: the petrodollar. The United States negotiated an agreement with Saudi Arabia and other OPEC countries so that oil would be sold exclusively in dollars. This forced nations around the world to continue using the US dollar to secure their energy supplies. Thus, even without the gold standard, the demand for dollars remained high, and the dollar consolidated its position as the main global reserve currency. The role of the dollar in today's financial system. Today, the dollar still dominates the global economy. More than 60% of the world's central bank's foreign exchange reserves are denominated in dollars. In addition, about 88% of international transactions are made in the US dollar. The dollar is also considered a safe haven during crises. When there is global economic instability, investors and governments buy dollars and US Treasury bonds to protect their assets. This further strengthens the US currency. In addition, the United States uses the dollar as a powerful geopolitical tool. Since most international financial transactions pass through the U.S. banking system, the U.S. government can impose economic sanctions, blocking countries from accessing the global financial system. Is the dollar safe or under threat? With this dominant position, it seems that the dollar will never lose its status as the global currency. But is this supremacy unshakable? In recent years, signs of weakness have begun to emerge, raising questions about the future of the U.S. currency. 2. Signs of weakness. What's happening to the dollar? For decades, the dollar has been synonymous with stability and confidence in the global market. But in recent years, worrying signs have begun to emerge, raising a disturbing question. Are we witnessing the beginning of the decline of the world's most powerful currency? What once seemed impossible is now a real concern for economists, investors and governments. Runaway inflation, a growing public debt and the growing global de-dollarization are just some of the challenges threatening the dollar's reign. Let's take a look at each of them. Inflation and the loss of purchasing power. One of the most obvious signs of dollar weakness is rising inflation. Since the 2008 financial crisis, the Federal Reserve has pursued aggressive stimulus policies, printing trillions of dollars to prop up the economy. During the 2020 pandemic, this money printing intensified. Between 2020 and 2021 alone, the U.S. government injected about 40% of all dollars in circulation into the market. The result? A rapid rise in the prices of goods and services, and a reduction in the purchasing power of the population. Inflation in the United States has reached its highest level in 4 decades, forcing the Federal Reserve to raise interest rates in an attempt to contain the problem. But this solution has a dangerous side effect. Higher interest rates make American debt more expensive and could slow economic growth. If inflation continues to spiral out of control, confidence in the dollar could be shaken, encouraging countries and investors to seek safer alternatives. Public debt out of control. Another major problem threatening the dollar is the unsustainable growth of the United States public debt. Currently, the national debt has exceeded $34 trillion, and continues to rise at an alarming rate. To keep the government running, the United States must continually issue treasury bonds, essentially borrowing money from global investors. But with such a high debt, many are beginning to wonder, how long can the United States sustain this model? If international creditors, including China and Japan, 2 of the largest holders of treasury bonds, were to reduce their purchases of U.S. debt, the U.S. could struggle to finance its operations, forcing the Federal Reserve to print even more dollars and further increasing inflation. The ripple effects would be devastating for the dollar and the global economy. De-dollarization. Is the world seeking alternatives? In addition to domestic challenges, the dollar is facing a new enemy, global de-dollarization. In recent years, a growing number of countries have sought alternatives to the dollar in international trade. Countries such as China, Russia, India, and members of the BRICS are signing agreements to conduct transactions in their own currencies, reducing their dependence on the U.S. financial system. China, for example, has promoted the yuan as an alternative to the dollar and has struck billion-dollar deals with oil-exporting countries allowing payments in Chinese currency. In addition, China's central bank is increasing its gold reserves, signaling a possible transition to a financial system less dependent on the dollar. Another worrying factor for the dollar is the increasing adoption of central bank digital currencies, CBDCs. Countries such as China and India are already testing their own digital currencies, which could further weaken the dollar's dominance in international trade. If this trend continues, we could see a fragmentation of the global financial system, with different economic blocs using their own currencies, reducing the dollar's influence on international trade. The dollar at real risk? With rising inflation, unsustainable public debt and a shift in the global geopolitical landscape, the dollar faces challenges that cannot be ignored. But does this mean we are on the brink of collapse? Or does the dollar still have the strength to maintain its status as the dominant currency? 3. The role of artificial intelligence in financial analysis. With so many variables influencing the future of the dollar, how can we predict what will actually happen? The answer may lie in artificial intelligence. Today, advanced algorithms are already used by banks, investors and governments to analyze economic data and predict financial crises before they happen. But how exactly does AI analyze the financial market? And what do the models predict for the future of the dollar? How does artificial intelligence analyze financial trends? Artificial intelligence has a major advantage over any human analyst. It can process billions of data in seconds and identify hidden patterns that would take years to be noticed manually. AI models analyze information from various sources, such as historical data from previous economic crises, inflation, interest rates and GDP growth, movements of large investors and governments, market sentiment based on news and social media, U.S. Treasury bond buying and selling flows. With this information, AI can calculate probabilities of future scenarios, helping economists and investors make more informed decisions. Examples of AI predicting financial crises. Although it may seem like a futuristic technology, artificial intelligence has already been successful in predicting important situations in the past. One of the most famous cases was when AI systems identified signs of the 2008 financial crisis even before the banks collapsed. Machine learning algorithms analyzed patterns of defaults and detected that the U.S. mortgage market was in a bubble. Although many ignored the warnings, the financial disaster came soon after. Today, large financial institutions such as Goldman Sachs, J.P. Morgan and BlackRock use AI to monitor risks and predict market fluctuations. But do these models indicate an imminent crisis for the dollar? What is AI saying about the future of the dollar? By analyzing the same factors that have led to the collapse of other currencies in the past, AI has found worrying patterns. Some of the key warnings raised by the models include risk of hyperinflation. If the Federal Reserve continues to print money to finance debt, inflation could spiral out of control, further devaluing the dollar. Declining global demand for dollars. De-dollarization could lead to a decline in the dollar's use in international trade, reducing its strength in the long term. Possible partial replacement of the dollar. Some forecasts indicate that new central bank digital currencies, CBDCs, could gain traction, weakening the dollar in global trade. However, AI also points out that the dollar still has the strength to maintain its leading position, as long as the US can contain inflation and maintain the confidence of international investors. Is the future of the dollar written? While AI can predict trends with high accuracy, the financial market is still influenced by unpredictable factors such as political decisions and unexpected geopolitical crises. What we know so far is that AI is revealing warning signs that cannot be ignored. But are we really headed for a dollar collapse? Or is it simply going through a phase of adjustment? 4. AI reveals scenarios for the future of the dollar. Artificial intelligence analyzed billions of historical data, economic trends and geopolitical events to outline the possible paths that the dollar may follow in the coming years. And what it discovered could completely change the course of the global economy. Are we facing an inevitable collapse? Or does the dollar still have the strength to remain on top? Let's explore the 3 most likely scenarios for the future of the American currency. Scenario 1. The dollar maintains its global dominance. The first scenario outlined by AI predicts that the dollar will continue to be the dominant currency in international trade and financial markets. But for this to happen, some conditions need to be met. Controlling inflation. If the Federal Reserve manages to reduce inflation and restore confidence in the American economy, the dollar could strengthen again. Fiscal reforms in the U.S. The government will need to reduce deficits and contain the growth of public debt to avoid a crisis of confidence. Maintaining U.S. military and political strength. U.S. influence on the geopolitical landscape will continue to be a key factor in the stability of the dollar. If these measures are implemented well, the dollar could remain the dominant global currency for many decades to come. However, this scenario requires significant changes in U.S. economic policies. Scenario 2. The dollar gradually loses strength. The second scenario envisages a slow but steady decline of the dollar as the world's leading currency. AI has identified the following factors that could accelerate this transition. Increased de-dollarization. If more countries start trading in their own currencies, global demand for dollars could fall significantly. Rise of new currencies and digital assets. The Chinese yuan, the euro, and even cryptocurrencies could gain ground as alternatives to the dollar. Reduction of foreign exchange reserves in dollars. Many central banks have already begun to diversify their reserves, buying more gold and other currencies. In this scenario, the dollar does not disappear, but it ceases to be the only global reference, making room for a more decentralized economy. Scenario 3. The total collapse of the dollar. The third and most alarming scenario is that of a complete collapse of the dollar. Artificial intelligence points out that this extreme scenario could occur if a serious crisis shakes global confidence in the American currency. Risk factors include an American debt crisis. If the U.S. is unable to pay its obligations, investors could abandon the dollar en masse, causing a sudden devaluation. Total loss of confidence in international markets. If an unexpected financial shock occurs, such as a widespread bank failure or a major political crisis, the dollar could quickly lose its relevance. A new global currency replacing the dollar. If countries create an alternative financial system based on digital currencies or a basket of currencies international markets, the dollar could be permanently sidelined. If this scenario comes to pass, the world could face a new period of financial instability, forcing governments and investors to seek alternatives to preserve their wealth. What does this mean for you? Regardless of the scenario that comes to pass, one thing is certain. The global financial system is changing, and preparing for these transformations will be essential. Artificial intelligence warns us that the dollar may not collapse immediately, but current trends indicate that its hegemony will not be eternal. Whether through investment diversification, the use of new financial technologies, or adapting to new economic policies, being informed about these changes can be the difference between losing money or taking advantage of emerging opportunities. 5. Conclusion and final reflections. I has analyzed billions of data points, studied past financial crises, and projected future scenarios for the dollar. And what have we discovered? That despite its decades of global dominance, the U.S. currency is facing unprecedented challenges that could redefine the global economy. We have seen that rising inflation, U.S. public debt, and de-dollarization are weakening confidence in the dollar. Countries such as China, Russia, and BRICS members are looking for alternatives, and new technologies such as central bank digital currencies and cryptocurrencies could accelerate this transition. I has revealed 3 possible scenarios for the future of the dollar, from maintaining its global dominance to a gradual decline, and even a total collapse in a major crisis. None of these possibilities can be ignored. But what does this mean for you? How should individuals, businesses, and governments prepare for this potential economic transformation? What can you do to protect yourself? Diversify your investments. Relying exclusively on the dollar can be a risk in the long term. Having assets in other currencies, gold, cryptocurrencies, and real estate can help protect your assets. Keep up with changes in the global financial system. The rules of the game are changing. The adoption of new digital currencies and the reduction of the dollar's influence can directly impact your financial life. Learn to use new financial technologies. If the world is moving towards a more digital and decentralized system, mastering new tools, such as blockchain and artificial intelligence applied to finance, can be essential. Be aware of signs of instability. Financial crises rarely happen overnight. Monitoring economic indicators, such as inflation, interest rates, and monetary policies, can help predict risks and act before it's too late. Will the dollar collapse? The big question remains: are the dollar's days really numbered? The truth is that in the short term, the dollar is still one of the strongest currencies in the world, and the US still has great economic and military influence. However, the landscape is changing, and ignoring these signs could be a strategic mistake. History shows that no dominant currency lasts forever. The British pound was once the world's leading currency before being replaced by the dollar. Now, we are seeing new challenges that could lead to a reconfiguration of the global financial system. Whether it will be a slow decline or a sudden rupture remains to be seen. But one thing is certain: the world is changing, and those who are prepared will have a huge advantage in the economic future. What now? Your opinion matters. What do you think? Will the dollar continue to dominate the world, or are we really heading into a new economic era? Leave your comment below and share your opinion. Are we on the verge of a historic transformation in the global financial system? If you enjoyed this video and want to continue following content about economics, technology, and investments, subscribe to the channel, activate the bell, and share this video with your friends. The future of money is being rewritten right now. The big question is, are you ready for it?